This week's tip from Tara is all about conventional loans. Now, before you move on thinking, oh, there's nothing new to see here, I have got some updates and some unique things going on with conventional loans that even seasoned agents may not be aware of. Let's start with the basics. The most common myth with conventional loans is that it requires 20% down. Not true. The minimum is 5% down, and even lower if you're a first-time home buyer. So a buyer who has not owned a home in the prior 3 years can actually do a conventional loan with as little as 3% down. So that's even less than FHA. Pretty sweet program. There's also some unique programs within the conventional loan called HomeReady and Home Possible. Those are programs that are they've got some income limitations, but if you can fit inside that box, and we've looked for every client, one advantage is lower mortgage insurance rates, which helps keep those payments a little bit low. A little more flexible income guidelines. Sometimes we can use income, for example, from the household of somebody who's not even on the loan. And while there is home ownership education required, it also allows for lower interest rates. So compared to a standard 3% down. It's a great little product, and we use that whenever it might make sense. On the credit side, you might have heard that the minimum on a conventional loan is 620, and that is accurate. Folks less than 620 sometimes will look at FHA to see if that might be a better fit. However, a little known aspect of a conventional loan is that we can average the two borrowers' credit scores to see if they qualify for the above 620. Okay? The loan still has to pass through automated underwriting by actually reviewing their credit report, but that average technique might get them to be able to fit into that conventional loan. This is a great big deal option for couples or a borrower and a non-occupant co-borrower where there's big differences in the credit scores. This may be a great fit. Another new tool we have is rental history. Literally, we can click a button now and say, hey, automated underwriting, I want you to know I can document 12 months of on-time rental payments for this buyer. And that alone is turning some loans that would have been a refer, which basically means the automated underwriting doesn't like them, into an approve. And that is just a huge, huge deal. So if you thought conventional loans were only for buyers with perfect credit or huge down payments, there's a lot more to them that we're using to your advantage. If you have any scenarios that you'd like to run by us, we are always here to help. We want to be your lender. I'm Tara Ryan with Fairway Mortgage, and I'm here to help you navigate all of these options. And let me ask you, if you've ever received a tip that has been helpful to you, please consider us for your next buyer.